The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
So in one quarter, we did almost what we did in the prior 3 quarters in revenue for Q4 2026. So that's a very big signal to investors that, hey, it's showtime.
All right, welcome back inside our proactive newsroom. And joining me now is Evan Gappelberg. He is the CEO of Nextech3D.ai. And Evan, good to see you again. How are you?
I'm great. Great to be back, Steve.
Yeah, and also joining us is your Chief Financial Officer, Anum Waqas. And Anum, nice to see you as well.
Nice to see you, Steve.
Yeah, so Evan, we're here to talk about your Q4 and full 2026 financial numbers. And you've been talking over the last 6 months to a year about the changes that you've made, and they really are reflected well in these numbers. The fourth quarter, one of the strongest for the company. So just overall, your thoughts on what you're seeing.
I mean, honestly, Steve, this moment really is personal because it reflects the journey that Anum and I took together when she took over as CFO of the company just a few short years ago. And we've been on this journey now for years, rebuilding the company, refocusing the strategy, and staying committed even when it wasn't easy. And there were some really, really rough days. And so today, though, what we're seeing is the discipline translate into real results. And so that's kind of the big deal for me is that we spent years getting here, and now the results are speaking very loudly that we've actually achieved our initial goal, which was turning Nextech into a revenue generating, high growth, high margin company in the AI event tech space, which is, what we've accomplished, Steve.
Yeah. And tell me a little bit about the revenue and the growth that Evan's talking about, because your Q4 numbers, 216% increase over the year before, 3 times that you're able to get that. It's a big number that jumps right off the page.
Well, I think several factors contributed. We saw stronger sales execution, contributions from recent acquisitions. As you know, we acquired Eventex and Crafty Labs, and growing demand for our software solutions. We also started seeing benefits from integrating our technologies and customer relationships. Importantly, many of these acquisitions are still early in the year, Steve. So in my opinion, there's still meaningful upside ahead. And I don't view Q4 as a one-time event. I think it reflects a stronger operating model, better execution, and the benefits of recent acquisitions beginning to come through.
There's a lot of factors when you look at the numbers themselves. Margins obviously is a huge one. Cost structure is another one. You've been able to really control a lot of that, and Adam, you're seeing that within your numbers.
That's true. We became much more disciplined operationally. We reduced overhead, streamlined teams, and significantly lowered our overall headcount while maintaining our ability to execute. At the same time, we increasingly leveraged AI and automation across various functions. If you look at the numbers, operating losses improved by approximately 80% for the full year. But more importantly, if you look into numbers, they improved by approximately 96% in Q4, which is significant. And I think that quarter trends gives a very good indication of where the business is heading.
And just picking back on something you talked about, 2027, that you feel that you can carry that momentum in there as well. You've got great confidence because of the work that's been done leading up to this announcement, correct?
That's true. I think the path is becoming increasingly visible. If you see the financials, we have software margins above 90%. Cost of sales declined significantly during the year. Operating losses improved materially. And recent acquisitions are still in the early stages of integration. In my opinion, as revenue continues to grow, more of that revenue should flow directly to the bottom line.
Yeah. Evan, a lot of the work, as you mentioned, you talked about in leading up to this point, has been to not only fix certain parts of the company that needed fixing, but it seemed like the whole streamline of the entire company has made the biggest change.
Yeah, look, Steve, I mean, our shareholders should know that we've been extremely successful in the past in building Nextech into a market leader, and now we're doing it again. The difference this time is that the fundamentals are much, much stronger than they were during COVID. Q4 was our best quarter and the trajectory is up, right? Revenue, we hit almost $1 million in revenue for the quarter and compare that to just over 2 million for the year. So in one quarter, we did almost what we did in the prior 3 quarters in revenue for Q4 2026. So that's a very big signal to investors that, hey, it's showtime. And so, you could just keep tacking on more and more statistics, gross profit of, 90+%. It's kind of unheard of. To be honest, Steve, when I started, this journey as CEO, uh, it was a dream to have 90% gross margins. A dream. I talked to bankers and say, yeah, the goal is to have 90%. And they'd be like, good luck, right? And so here we are. And so I give, credit to Anum and to the team. I mean, these are significant improvements. The operating loss right now is very, very low, which, actually, if you take out some of these one-time charges, we're cash flow positive, and we're really, really on our way to profitability, which, is a whole nother conversation. But we could see that actually happening in the not too distant future because our cost of sales is very, very low. Our margins are very high. Again, we've cut our operating losses quite significantly. Our payables, we used to have a lot of AP, accounts payable, went from, over 3 million to, much lower number. And so everything is pointing up, all indicators. The industry is growing. The event tech industry, I don't know if we've mentioned this on this show, but BlackRock and Apollo, the two biggest private equity companies on the planet, have just made multi-billion-dollar acquisitions in this space, which means money is flowing into event tech. That's a very bullish sign for our investors, and they should take note because we are the only publicly traded company in this space that I'm aware of. And that gives us a very, very exciting opportunity to see the stock and to see the valuation of the company accelerate in 2026 and beyond, Steve.
All right. We'll see how things turn out. Evan, thank you so much. Good to see you both. And Adam, nice to meet you as well. And thanks for being here.
Thank you.
Thank
Evan,
you,
as
Steve.
always, thank you.
Yeah, thanks.
Anum Waqas, the CFO, and Evan Gappelberg, CEO of Nextech3D.ai.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.